data, the market treated his speech as dovish, helping U.S. government bonds recover from their intraday lows and close and roughly unchanged 10-year yields on the day. Remember yesterday we were talking about how they were up at a 4.45 area, and they're right now about 4.36. So nice little rally there in the bond market. Again, they were trading at a 16 handle. They're up here at 18 right now. So kind of what he said was the recent data do not, however, materially change the overall picture, which continues to be one of solid growth, a strong but rebalancing labor market, and inflation moving towards 2% on a sometimes bumpy path. Labor markets rebalancing is evident in data on quits, job opening surveys of employers and workers, and the continued gradual decline in wage growth. On inflation, he says, it is too soon to say whether the recent readings represent more than just a bump. We do not expect that it will appreciate to lower our policy rate until we have a greater confidence that inflation is moving to substantially down towards 2%, given the strength of the U.S. economy and progress on inflation so far. We have time to let the incoming data guide our decision on policy. So that's what he said yesterday. You can see the rally there off the lows. We're down at, and again, that last hour trade, always tough to trade. And we always talk about how that last hour trade is. And considering he was chatting away at that time, kind of made it even more hard to talk. And another Fed speak says the first rate cut should come in around the fourth quarter of this year. So these guys are all talking, and they all could have some effect on our markets, as you could tell. So you got to keep that in mind as you are trading, because you never know when these guys are going to say something that kind of create some volatility here. But at least we know they're talking, so in case something happens, you can kind of work around it, or at least keep your risk at a lowest amount, so you don't get to run over by anything. So again, everybody here trades a little bit differently. So there was a question about 2% is 2.2%. It depends on how much you have in your account, right? I mean, could be 2% for some people, could be not. It depends on how many contracts you trade. Everybody here trades differently. Everybody here has different account balances. So you have to find the balance that you are comfortable trading, number of contracts that you're comfortable trading to make you stay with it in the trade and also not overreact to the price movement or volatility. And so that all comes into play. So it's a hard question to answer because everybody here has different tolerances and different account balances. So what we try to talk about here is make sure you find the balance that suits you and that you're comfortable trading. All right, so we are kind of just hanging here on these highs. We have no more numbers coming out today, just a big unemployment number tomorrow. We've been, again, kind of busy here a little bit the last couple of days, so that's a good sign. Nothing wrong with that.
Check those levels, make sure they're right.
10, 20, 15. Yeah, they're right, correct.
Okay. I was doing something else at the same time.
All right, so we're just kind of hanging here on these interim highs. We got resistance around the 10 area. Again, we have to be a little bit patient here and wait for opportunities to present themselves. We don't just trade for trading's sake. We have support and resistance areas. We also have price action trades, and all of them, they all have to be a little bit patient here and wait for those setups to develop and to be able to take that opportunity when it presents itself. So we never know when we're going to get some volatility one way or the other. All we can do is be patient and wait for a setup to develop and then trade it accordingly. I think that is key to being successful here. I mean, obviously, there's many opportunities there that you can trade depending on your aggressiveness, but we'd like to be a little bit more patient and wait for the market to give us those opportunities. Fed Chair Powell repeated on Wednesday that he does not expect it will be appropriate to lower our policy rate until we have a greater confidence that inflation is moving substantially down towards 2%. However, some of the bigger points that were highlighted stress that the recent data does not materially change the overall picture, and it would be appropriate to start cutting rates at some point this year, he said. The market participants viewed these statements positively, with gold extending its run up into a record territory. It's not only shining metal. It's It's not only shining metal. Yeah, it is way up there these days. As we're down ticking here a little bit. Downside support, a little support here, even, but again, our better support would be down at the 94 area. So obviously the non-farm payrolls and the JOLTS reports were contributing, or not, it was the 80, what was that? So 30 this morning, the Challenger report. Those all came out this morning and obviously had a little positive effect on the market here. And just continues yesterday's late afternoon rally. So obviously tomorrow, with unemployment, which will release the levels, they'll release the unemployment number at 7:30. We start obviously here at 8:30. So we will trade the after effect, but that's okay. Definitely don't want to have a position now when those numbers are released, especially unemployment. They could be all over the place. And those computerized trading geeks take over. Those HFTs, high frequency trades coming in. We can't keep up with those guys. I mean, that's really the bottom line, right? All right, it did say we have a little support there at even area if you were aggressive and wanted to jump in. Nice little scalping opportunity there. Again, there are interim levels for more aggressive traders, take a little bit more risk, looking for more opportunities to trade. I'm giving you levels that are a little bit quote unquote safer, whatever that might be. But again, this is futures trading, so there's nothing safe. You have to always keep your stop in place. Anything that I say as far as any trades or opportunities or support and resistance areas or setups that we might have are definitely discussed in our education course that we offer. So if anybody's interested in that and learn a little bit more, add to your experience trading, add some different setups to your uh, repertoire of trading, then we can help you there also. And if you're new to it, trading, it's even better. All right, we are just kind of hanging here. and a nice little area there, the even area. If you're very aggressive, wanted to get a little long or take a little scalping opportunity. Now we're just going to be a little bit patient. Upside resistance would be around the 10. There are no numbers coming out, but like I said earlier, there's a slew of Fed speaks this morning. Yeah, Philip, we're here. Just take a little breather and you're all over me. Jeez. Sorry. Did you just come in or something? Do you want the levels again? What? What? There are the levels for you. We are just not doing anything. We're just going to hang in here around this even area. Um, seems like once we start trading, they just pull the plug on the trade. Yesterday's trade was somewhat very slow until Powell talked, but then again, that was expected. And then they got some volatility, some movement, and then they brought it all the way back. So you can see the break and then the rally. That's what happens with any Fed consideration. Sometimes talking these people, well, especially Powell. Obviously Powell's got more swag than all the other ones. So, and then we have a lot of other ones today. As I said earlier, there's a Fed speak at 9, at 11:15, 11:45, two of them at 1 o'clock. They're all over the place today. No fundamental news, just a lot of chit chat. So we were just kind of hanging here around this even. We had a little bit of for those of you who are a little aggressive, a little bit of a buying opportunity there. Now we're just kind of hanging here. Our support level is down at the 94 area. We'll see if we get down there or not. Upside resistance would be up at 10. Sure, we can repeat the levels again in the chat. In case you missed them, we're going to repeat the levels there in the chat for us. There they are. Thanks, Don. I appreciate it. Those are again used as a guide to the day. And then we can use those. We can adjust those a little bit. We can tweak those. All depends on price action. Sometimes we get close to a level, we kind of don't get filled. So obviously now we have to readjust the thinking there around the level once we, depending on how the price action is and what it dictates. So those are things that we have to consider when we're trading. But the levels are good all day, even though we kind of focus on the morning hours. I think we get more price action trades in the morning hours than we do late in the afternoon. So we have to, we focus more on morning hours to give us those scalping and price action trades. I think the dynamics change as the day goes on. The volatility changes, number of traders change, and then you get more um, activity even the last hour. But that becomes a little bit more. The price action trades are not as solid as they are during the day. So different dynamics as the day goes on in trading. Again, anything that I'm saying we talk about in our education course that we offer. Let's see here. So we talked about Powell. We talked about unemployment tomorrow. Non-farm payrolls coming out at 7:30. Now they're expecting 215,000. Last month was 275. We always look at um, the adjustment from the last month. That always kind of you get the initial report, and then they can give you the adjustments right after. Well, that's what. Since we're not trading, I'm just telling you what happened. So you get that initial report, and then you get the adjustment from last month, and then the market reacts to that, especially if it's out of whack. So that's why you get those fake moves one way and then a reversal. All right, we're down ticking here a little bit. We're looking at the 94 area as a little bit of support. And that's where we're at as far as our next support level. All right, down taking that touch here. Again, if anybody has any questions, please feel free to ask in the chat. No, we're down ticking here a touch. Get down here to 97 area. We're looking at 94. We don't have any numbers coming out this morning. Well, like I said, some Fed speaks all day long. All right, we're down here on these interim lows, looking at the 94 area. Again, we like to scale around that area. Some of you, everybody here has different ways of scaling in and out. So we have to find the optimal situation for each individual here, not what I do or somebody else does, but rather what makes it easier for you to trade. See our blue bands coming in there, right here, right around this area. So again, if you're going to trade the blue band, you got to take that into consideration as well. Volume's kind of light here this morning, probably waiting for unemployment tomorrow. It's staying here on these interim lows, looking at the 94 area. A little support here, as you can tell by the market kind of just hesitating. See if it wants to break through or not. Again, you're going to trade the blue band. Just keep in mind that you'll have to also trade the 94 area as well. So your scaling in has to be accordingly, or just take a little bit of a profit against the blue band and then look for the 94. That's another alternative. It's trying to inch its way down here. We got the 94 areas, a little support. Okay. Stops at 5.25. All right. Well, that was annoying. Well, depending on your aggressiveness, be careful there around the 95 uh, if you had the 95. All right, we're staying a little bit weak again. Be careful there with 95. It just got down to 5.25 there against our 94 area. So if you're scaling in there at 95, and I missed out just by a little bit there. So maybe leave the 94 and the 93 in there. If you're more risk averse, you're considering not taking a level at all because of the price action. If you're adjusting a little bit to the price action, then maybe don't take the 95 and take the 94, 93, or just leave the 93. And give you different ideas here because everybody trades a little bit differently. And considering we just missed out on our entry point by on the top end of my scale anyway, by just that little bit, that's kind of annoying. Again, if anybody has any questions, please feel free to ask in the chat. We don't mind questions. All right. Well, we did pop up here to even. Again, even one of those areas that you could always find a little bit of a trade in if you're a little aggressive. But be careful there at 95 and even the 94, only because of the price actions. If you're more risk averse, be mindful of that. Trade it a little bit smaller. Obviously, the level is not as strong as it was 5 minutes ago, given how the price action went down to 95.25 there instead of going down to 94. So adjust a little bit, adjust your number of contracts, adjust your entry points. If you're going to more risk averse, you're going to not take it at all and wait for the next opportunity. On the downside would be around the 85. You can see our green band and our hourly coming in there at 88. So those are different options for you. Yeah, well, we almost got our 94 triggered, unfortunately. Just missed it by just that much. Upside resistance is up at the 10 area. A little bit there at the 03, but we already got there at 03 last a little bit ago, so that's not as strong, but definitely the 10 is our first resistance area on the upside. Anybody has any questions, again, feel free to ask in the chat. We don't mind questions. All right, we are just now just hanging. They really pulled the plug here quick. They've been doing that lately, a lot lately. It's been trading, then all of a sudden they just kind of pull the plug. And look, tomorrow's unemployment. I don't envision too much happening tomorrow. I mean today, given that tomorrow's unemployment. But then we do have all these Fed speaks, so you never know how they're going to interpret things or not. So that's one thing you got to try to remember and be patient about. Yeah, I mean, it is for that's what's going on right now, but doesn't mean that it'll continue that way. Again, most of the volume definitely traded during the day, so you have these like moves at night, but they're not volume filled, and they become very difficult to trade, and then definitely not recommended. That's for sure. But it is what it is. I think basically for the most part we've been in this range, right? Yesterday we dipped down to at 52.30 area, high is 53.30, right? So, I mean, we're still at these all-time highs and just kind of sidewinding here a little bit, consolidating up here. We've been up here for a couple, a while, and the real question is: Does the market have any reason to continue or not? So, I mean, just consolidating. It's just like if you look at it like a flagging formation. If we get the markets are moving around, they get a flagging formation, then that's the next leg up or down, depending on how you look at it. And that's where we're at right now. Are we going to get that next leg up, or are we going to? So the market right now is just consolidating here a little bit and trying to figure out what direction we're going to go next. Well, we are definitely range bound here a little, and we shall see where we want to go next here. Upside resistance is up at the 10, downside support. You got to be a little bit careful there. We had 94, but because of the price action, we got down to 95 and change. It's a lot riskier right now at this point, so you have to make those adjustments again, depending on your risk tolerance. But we're basically just range bound here a little bit. And again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. It always amazes me how the market could be busy, 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 and all of a sudden they get themselves into a 2 point range for like 20, 15 minutes, or even more. It just amazes me sometimes how that works out.
After that run overnight, they have to re-hedge.
Yeah, well, it started yesterday afternoon, right? Off that low. Had one big break at like 1 o'clock, uh, and then they slowly brought it back, and they couldn't. And then that's it. Maybe 2 o'clock. I think he was talking around that time. So
I know the 71's going to be important for the next couple of days.
71 on the downside.
Yeah, 52.71. We should see it again.
Mhm.
I guess we'll get to see what's going to happen with it at 9:30.
Oh, what's at 9:30?
Just
Just a number.
just a time or just a
Yeah,
hair before.
yeah. There's no new. I mean, there's the Fed speak is. Well, there was one now, right? At at 9. I can tell he hasn't done much to the market, and there's another one at 11:15, 11:45. Two of them at 1 o'clock. So, and I don't know who's going to have more important, which governor is going to be more important to listen to or not, or which governor is going to be talking about the economy or not. But they're always watching and listening.
The only person I know that can move the market more than the Feds was Trump. Every time he opened his mouth, the thing would bounce.
Yeah, well, that's true too. Yeah, Pat, that's true. Technology sector has been leading the market to the upside anyway, so uh, we'll see if that continues or not. Yeah, but none of those layoffs have gone into the employment numbers. I mean, they've been saying that for a few months about these layoffs. Last few months that there have been a lot of layoffs, but hasn't been reflected in the employment numbers.
To me, the numbers are kind of like the fox guarding the hen house. We'll tell you what we want you to know.
Yeah, well, that could be true too. That definitely could be true. But by the same token, that's what the Fed looks at to make their decisions. So by the same time, even though we agree that those numbers could be fudged, they still look at those numbers, and the market's going to react to them anyway. We are very range boundy here. Again, if anybody has any questions, so you can always thoughts, ideas, put them in the chat there. We don't mind them, especially when it's slow like this and they pull the plug on the market. And it's hard for me to keep talking, even though people wanted me to talk, when there's not much going on, especially all of a sudden they, like I said, I wish I knew that. I don't know how they do it, but I just pull the plug on the market really quickly. Bonds breaking down here a little from their those interim highs. And I guess if you do anything, I mean, what's happening here is I guess maybe they're fighting over bulls. Oops, sorry, the bulls and the bears are fighting over, position here. I don't know. Yeah, make some excuse about it, but it's tough. It's tough when they just don't they don't trade anymore. Tough to get too excited about the market, but you have to be patient. Well, we are breaking down here a little bit now. Like I said earlier, you have to be a little bit careful here of the 94 area. For the reasons that we talked about. So if you're going to trade the levels, trade it a little bit more cautiously, and adjust a little bit here to take the extra added risk of missing the level initially into consideration.
All right, it's got to do its thing.
Yeah, well, that's one again. They went down right down to 94 and change there, and popped it back up. So now the 94. If you have 94 in there, it's a little bit riskier. Again, that's only because of the price action is dictating such. You have to make those adjustments, and we talked about the levels they're not etched in stone. You have to make those adjustments according to the price action, and this is one of those situations where we try to make those adjustments. I have to tell you that you have to make those adjustments because the price action is dictating that. So right now, if you're really risk averse, you're probably not even doing the 93 here, or actually 94, because we didn't get down to it. We got down to 94 and a quarter there. So we missed that one by a tick. Kind of a little frustrating, right? But it is what it is. What are you going to do? All right. Well, they pushed it back up here to that range that they were at. That would have been nice to get filled there at 94. Um, no, but again, we got down to 94 and a quarter. And so unfortunately, it is what it is. Sometimes we're just going to be that close and not get filled. And then you have to, again, make those adjustments according to what the market is telling you. And so consequently, we have to be a little bit careful there. Now, if we get back down there, down to the 94, it's kind of a little frustrating to miss them by just a little bit. But hey, that's nature of the game. Sometimes we get filled by a tick and we don't think about it because we're supposed to get filled by a tick, and the market rotates for us and gives us a nice trade. Other times we miss it by a tick and we complain about it. So, you know, yeah, it is what it is. And we just have to adjust accordingly. You can't get too upset about it. You just have to move on and wait for the next opportunity. If you're a little aggressive here, there's a little bit of a buy here above the 01. And if we stay above 01, a little bit bullish. All right. Well, that's unfortunate. We just we made a dive down to that 94 area, and we just missed out. And now it's coming back in here into this little range that they've been trading at for the last 30 minutes. Thought we were going to get lucky there for a second.
Well, it's 9:30. They got to show their hand now sooner or later.
All right. Well, now again, if you're trading 94, very, very riskier. Only if you're very aggressive are you even going to leave the 93 in there. But otherwise, look for the 85 level on the downside. You can see our green band's coming in there at 88 and an hourly if you're very aggressive.
We got a 1387 VIX.
1387, so back down to a 13 handle. We were at close to a 16 handle the other day when we had that break 2 days ago. You can tell how the volatility always increases when markets go down. Traders like it when markets go down. There's more movement when the market uh, rotates to the downside. A lot less. The markets get the VIX, the volatility gets sucked out. The VIX is a volatility index, and could range. Well, right now it's down at the 13 handle. It gets down to the low teens. It's very, very tight little ranges. That's where we're at. It gets on the high teen. We like it in the high teens. Obviously, it can go a lot higher, and then that's when we have to make sure we adjust your stops accordingly. Because it gets a little bit, markets can move around very crazily then. We also have to adjust our stops to take that into consideration. All right, well, coming back down here to these lows, I did say that anything above the '01 is a buying opportunity. You could use that as a stop as well. I guess you could maybe, if you wanted to, get short in the top of that range and make sure your '01 would be your stop. Another way of using what the market is telling us to be able to find your stop areas. And that would be one way of doing it. If you know where your exit strategy is, you can find where your entry points for your position could be. So you kind of go backwards a little bit. Point being that you could have gotten short around the 99 area there if you wanted to and have a no one stop. All right. Again, we unfortunately find ourselves in a little bit of a range. Again, if we go back down ticking here, definitely have to be a little bit careful here around the 94 if we come back down here for the reasons that we talked about.
It's almost like they don't have enough ammunition to take it down.
No, they're saving their bullets for tomorrow. It's a good way of putting it. Ammunition, and I call it bullets. It's very good. It's very good. Yeah, no, they're saving their bullets for tomorrow. And we just missed out a little bit there. What are you gonna do? But it's not like we're trying to save our bullets. So the market's not giving us a chance to use our bullets. So it is what it is. And it is it's the day before unemployment. So unless you get somebody has a leak on the number. Ooh, what? I didn't say that. But if somebody has some kind of information and they want to play against or use it, you'll probably get that opportunity. They'll probably make you know maybe can push it down one way or the other or up at the end of the day. But right now, you know, they're just gonna leave it here. If somebody, again, who can make the market move that much on that kind of information? Not too many people, but I will say that some of them do have that information, the ability to get that information, even though they're not supposed to.
I think if we really knew what was going on, we'd quit.
Well, yeah, I mean, you would think. I mean, the one good story I will say this happened on the floor on the bond market with one big trader that was trading, and he's standing next to, I could say, the Goldman broker, and it's the unemployment number came out at 7:30, and the market opened up at 7:20, right? And so you have 10 minutes there to kind of position yourself one way or the other if you're whatever, you have 10 minutes. So but if when you're a local and you're standing next to the Goldman trader and you're a big local standing next to the Goldman trader, okay, so what? All right, let's say a forget the Goldman trader. Let's say it was any kind of trader, any kind of big position. Well, anyway, the market started rallying a little bit, and the big trader was. By the way, this is like everybody knows this story. It's out there because they took him to court. So, I'm not saying anything that anybody doesn't know. So they market was rallying, and of course, if you're standing next to a Goldman broker, that they're all of a sudden they're buying a lot of stuff, and the local is selling it, and the local keeps selling it, and the market keeps rallying, and the local keeps selling it, and of course, then the unemployment number comes out, and it's extremely bullish, and the local is obviously not having a good day, and um, they actually took the local off for a minute to make sure that he can cover his position that he had, right? So uh, anyway, so he had he was the rumor on the floor, because my floor clerk was, everybody knew what was going on. My floor clerk comes up to me and she says to me, "Oh, they took so and so off the floor because they needed to. He's down like 6.5 right now, so they wanted to make sure that he had enough money to cover his position." So that was happening in 10 minutes, 6.5. So, make a long story short, over the next couple of years, they ended up, he ended up going after them, and he ended up winning some kind of suit. And of course, Goldman, without acknowledging that they were right or wrong, right? They did make some kind of compensation for people who traded that day with them. They gave them some money back at the end of the day. Of course, I think I got a little bit of money. I had like a 50 lot with them or something, and I got some money back. I don't remember how much it was. I wasn't obviously, uh, I wasn't close to that broker, but there were other Goldman brokers. Anyway, the point being is that they did take him to court, and they did get some restitution without Goldman saying that they were right or wrong. So it does happen that they do find out these numbers somehow. I don't know how, but they do find them. But it is what it is. All right, there, Maureen. Have a good one. See you tomorrow. Enjoy your snow. Are you getting snow? We got we got a little snow. No, good. We got a lot of wet snow. Terrible rain, right? I mean, this got to move on. I guess they're getting a lot of East Coast is getting pummeled again. They've gotten so much rain there on the East Coast. It's amazing. Comes from Florida right up to the coast, and it comes and gets the stuff that we don't want. They get double whammy. Yeah, 40 degrees and rain is not fun, by the way, and windy. That stuff hits you in the face. It's cold. It's nasty. All right. Well, we are back into this range. Something we've been talking about for about an hour now. It is what it is. Like I said, unemployment's tomorrow. So if they're going to get a move, and if somebody, knows something, you never know. They could get some volatility later on this afternoon. I don't think anything's going to happen, but I mean, I don't like to think. So let's keep that caveat out there. I try not to think so much when I'm trading. There are the levels again, in case you missed them. Anybody that's hasn't seen them in the chat, we are range bound here. All right. All right. Just come back here in this range. Kind of going nowhere fast.
To join us live, come into Zoom, tradealong.com, Zoom, tradealong.com. That's a direct registration as a guest into our Zoom webinar on a daily basis. Carlos, quick shout out to you. Let us know how you're making out. Ginger, Yasu, Pat G, if anybody has any questions, they can certainly use their headset and microphone. It's the end of our morning session here. We're going to be back again tomorrow.
All right. Again, we are in this little range that we've been talking about for the last hour or so. So unfortunately, we are minimized in the opportunities. I think we got a little bit of a buy there above the 01. Our next support level on the downside would be down at the 85 area. Kind of in the middle here. Let's see what happens. I don't know what's the market's going to do anything or not. It is unemployment tomorrow, which I think market might be kind of hanging around for. So be a little bit patient with it as well. All right, we'll get back here in a bit.
Hey, quick shout out to Carlos. Hey, Carlos, you're back. Let me know in chat. Pat G, let me know if you're back. Yasu. If anybody needs a trading platform, ask. We can help you get set up as a new trader or changing over to a new platform. We also have one-on-one coaching here. One-on-one coaching is done in a live Zoom room or a private Zoom room, private meeting room where you can share charts, interact with your trade along coach, learn the art of price action trading, learn the art of setting Sol's key scalping levels and zones. We also have the ability for you to earn a funded trading account. A funded trading account. So there's a number of options in trading. You can trade your own account and fund, set up your own account and fund it with your own capital, your own risk capital. Start your trading business off. You can also look to qualify and earn a trading account funding setup. We have some affiliate relationships for that. We also have affiliate relationships for setting up charts, order entry, a trading platform for yourself. This service is a daily group coaching session focused on the S&P 500 E-mini for new traders and experienced traders that are looking to do better in their trade from an educational point of view only. We start out the session by setting key scalping levels. We call them coaching levels. Those are the areas of interest for the morning session of that particular day. Sol sets those levels for his own trading, pretty close to the cash open, so they're more valid for the session. Cash market opens. As those levels come into play, they could be in play or out of favor, depending on the price action, price movement of the S&P 500 E-mini. Looking to do 2, 3, 4, 5 trades. Looking to pick up 2 points plus on each trade. 2 points plus on each trade. The afternoon sessions are reserved for private coaching. Coaching sessions directly with your trade along coach. The methodology here from a trading perspective is called price action. Price action has been around for a long time. It's the action of trading around, in this case, scalping in and out of the market in and around pre-mapped out levels. Today's coaching levels, we had the pivot for today's coaching levels at 53.03. 53.03. We had resistance at 10, 20, 31, 40, and 50. Support below at 94, 85, 75, 67, and 58. Based on a price action trading methodology, you learn how to set those in your trading software, load them into your software, your order entry. As a new trader or an experienced trader learning the art of price action trading, you would load them into your software and you would pay attention to the action of price in the S&P 500 E-mini as it intersects with those levels. Day trades, momentum trades, short trades, long trades. You do that in simulation against real-time data through your order entry setup. And you practice until you get good enough to be able to trade in real time with real-time money up. Now, again, we described 2 ways to go here. Trading your own capital, which we can set up you for. It's like opening up your own business. You're at risk. You're also the individual that's rewarded based on your ability to trade and trade profitably. If you set yourself up through our affiliate, you can practice trade, work based on that affiliate's setup, and look to earn a funded trading account. And we can help you with that. So that's what we do on a daily basis here. That's the opportunity for you. If you like what we're doing here, tell your friends. ZoomTradeAlong.com. ZoomTradeAlong.com. Pop in. We have guest passes for you to come in, kick the tires, ask questions. We ask you to sign up pretty quickly for our service. This is a guest to subscription service. That's the first level of entry into our service. Right now it's on discount, so pop in. If you're already in our service and you're kicking the tires, I'll post the opportunity to sign up in the chat area in Zoom, with the discount link. Starts out with honor your host, which is your trade along coach. It's nominal. I always try to express how there's no question that trading is risky. There is a opportunity for return, right? That's the concept of being a profitable trader. But any business, in my opinion, is risky. And the opportunity to be your own boss, set your schedule, and then ultimately have freedom, is pretty special. Being able to work, I always talk about this with Don, being able to work from your laptop or your computer in the markets and being successful at it is one thing. Trying and being unsuccessful, you should go off and find something else to do. But for those that can make it, I think it's a great business opportunity. And that's my humble opinion. So pop in and join us, ZoomTradeAlong.com. Let us know where you hail from. You see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. For those that are joining us live in Zoom, if you want to ask a question through your headset and microphone, raise your hand and I'll provide you with a microphone. For those that are joining us from the outside, you want to join us on the inside and ask a question, join us live in Zoom. Ask to be set up with a opportunity to sign up for a trading platform. Get yourself set up for your business so that you can control your destiny if it works out for you. Join us in the morning session when we give out our coaching levels. Be part of our group coaching session. We work the market from 9 a.m., set our levels at 9:30. work the market until 11 a.m. Eastern time. We're looking to do 2, 3, 4, 5 trades. We're looking to pick up 2 points plus on each trade. We defend generally at 2 points. That's our basic stop structure. That expands based on market action and price action of the S&P 500 E-mini after the opening bell. Your trade along coach runs the session. You're able to interact with him. He's a 25-year plus veteran trader of the trading pits in Chicago. He's actively scalping the market as appropriate during the trading day. Don is a individual that had hooked up with the service many moons ago and is stuck with Saul, and we're lucky to have him. Don hails from the great state of Texas. You'll hear him during the morning session popping in and out with Saul. And again, we like to have interaction with those that are part of our service. So if you haven't picked up a headset and a microphone, do it. And we can provide you with the ability to interact also. We do that at the end of the morning session. We do that in the beginning of the session at 9 a.m. If you have any questions about our services, you're getting yourself set up and have a question, you have a question about the charts, question about your order entry, make sure you ask. This is your time based on this group coaching session to really delve in and learn from the individuals that have done this, are currently doing it. You know, we call this a coaching session. Watch, listen, learn to unlock your personal earning power by trading. This becomes your trading opportunity, your trading business. You know, initially we're looking to put on a couple $100 a day based on one contract. One of the nice things about trading the S&P 500 E-mini is that you can add contract size as you get better at your craft. And I think that's important for everybody to know, is that you start out in simulation. One contract against real-time data using your order entry. You're laying out your levels, the scalping levels that are posted in the chat, you know, given out an audio first, posted in the chat. And then you look to scalp around those levels in simulation first until you get good at it. And then you step out or step your toe in the water and look to do it real time with real money up, whether it's looking to utilize somebody else's capital or being good enough based on their criteria to be able to trade effectively, disciplinedly, it's like, do you know what you're doing? Can you apply it? And can you showcase it so that they understand that you have discipline? They understand that you can trade the market based on disciplined practice trading, and then step out into real-time trading and stay within that discipline. And that's the same thing individuals need to trade a trading account with your own capital. Why would you risk your capital if you don't know what you're doing? You're stepping in and opening up a trading business. You're the talent in your trading business. You're the one that is representing yourself, right? Like when you look in the mirror, that's your trader. And that trader is trading your own capital or looking to trade somebody else's capital based on their rules, how they're set up. And they're willing to give people a chance and an opportunity to do that only if They are disciplined, are true to form when it comes to the opportunity, and have spent the time and effort to become good at scalping the market, day trading, to receive that kind of opportunity. And it's really interesting to me because some people think that if somebody's going to give them the opportunity to trade capital, that's a light thing. It's not a light thing. They're providing you with an opportunity and they're not going to let you trade their capital unless they believe that you know what you're doing, that you've proven it, that you're disciplined, and that you showcase it based on profit and loss. You know, price action trading is a discipline. Having an opportunity to receive Sol's levels as a roadmap for the morning session. We call them levels and zones for a reason. I think you'll quickly pick up if you pay attention to it. Let's say you set yourself up with your trading platform. You learn to load Sol's levels into your order entry, into your charting, and you pay attention to the action of price in and around those levels. You'll start to appreciate how good those levels are, generally. Concept of having better levels could certainly equal better trades. But every market has its own, every market day after the cash open at 9:30 Eastern time sets a personality for the day. It sets a action of price during the day. That action of price vis-a-vis these levels, you need to adapt and adjust based on that day's action of price and how it relates to these mapped out levels. And as the action of price happens and the levels come into play or not, levels are become valid or invalid based on that action of price. And that's something that is witnessed and learned by individuals that are part of the service. There are days when some of these trades are gimme trades. Other times you have to work them. And as you get better and better at this, you start to add contracts. And then there is another level of price action trading that you can enjoy by taking contracts off. If you have two on, you could take one off and let the other ride. And that's a big deal when it comes to the flexibility of adding additional opportunity for profit in your trading. Now, granted, there's something called profit and loss. We look to minimize loss by setting stops. So in each trade, there is an entry, and there's a reason for that entry in and around a particular level. There's an exit strategy that you have thought about before you go into your trade, whether it's an exit strategy of 2 points plus or an exit strategy even before your stop gets triggered because something isn't right based on your trade. That's the 6 cents, 7 cents, 8 cents that you pick up based on the art of trading. You'll know as you get better and better at this when you messed up going into a trade. There's nothing wrong with that. Get out. You know, if you happen to have multiple contracts on and the trade goes your way, you know, generally, and you'll figure this out pretty quickly, is that 2 points is readily available in my humble opinion anyway, based on, let's say you review your charts and you see the opportunity tick off for picking up 2 points plus on each trade. Now, picking off 2+ points on each trade means less resistance and retracement to hurt you. So having said that, let's say you get yourself into a trade and you pick up your 2 points and you cover one of the contracts, and then you let the other one ride, and it may retrace its steps and look to shake you out, but you've already put on a little money, so it's not as painful. And then the market may come back, which is why you got into the trade, and retrace its steps up into the positive. And now you can unload your second contract, having made the money on your first contract, and your second contract gives you more. And then you can start to develop more than, the $100, $200, and $300 a day based on the opportunity for profit. That comes with skill and experience. That comes with developing a second nature based on practice, practice, practice. And that's the business. Where can you go? Developing I tend to make a correlation, in my opinion, between this and professional poker, where there are poker players out there or casual gamblers that net end up losing money, but they enjoy the game, but they got to stop because they're losing money. Trading, there's a lot of traders out there that are trading, not really knowing what they're doing. In my opinion, relying on trading platforms and software that lay out a good opportunity when it comes to the bells and whistles and the platforms to trade on. However, there's a very small percentage of individuals out there that make any money trading, particularly in the long and short run, which doesn't give much room out there. However, if you are disciplined, practiced, in this case, have a leg up, with Sol's levels, you can pick up the art of trading and look to be one of the people that make it, because you are disciplined, focused, you start to understand the order entries and stops based on a price action trading methodology. And in this case, the concept of having better levels equal better trades. And then it's about where you enter a trade, why you enter a trade there, where do you place your stop and why, and what's your exit strategy on that trade. Now, we're talking about tight stops generally at 2 points, so your risk is minimized. You can practice trade until you get good at it without risking your own capital. You have the concept of daily levels put together tied up against the cash open. You have the ability to witness the action of price vis-a-vis these levels. So you start to turn yourself into a better trader, a more sophisticated trader when it comes to entries, exits, and stops in and around these levels. And you become not the casual gambler. You become a focused, professional, seasoned trader like a individual that is a seasoned poker player, because you start to understand the rules. You start to understand how the market is behaving. That's the other players. And you're stepping in where it's more advantageous to you from a percentage point of view. You're only looking to pick up 2 points, which is generally available. And I would say now, if you think about it and you witness your charts, if you go back a little bit, you'll see that when it starts to get to 3 or 4 points based on a move, it generally retraces on you and can stop you out, both mentally or based on your place stop. Now, what Saul mentions from time to time in this group coaching session is that you have to be prepared to enter, and he has it set at a floating entry in and around his levels based on the action of price. Now, that's something that's taught by Saul to you, learned by you based on expression or the act of doing, practiced, identified, and then becomes second nature on your part, which I think is key to understanding how to get the most out of this group coaching session. And ultimately, if you decide to take one-on-one coaching lessons in a private Zoom room, you'll be able to work with Saul on that one-on-one basis and then come into this group coaching session as one of his students based on that relationship, keying on the areas that you need help with. Practicing that, and then asking questions. The idea of being critiqued, adjusted, and tweaked, in my opinion, is the difference between doing the same thing over and over again and not having the results you're looking for, or asking the individual in the mirror, yourself, or scolding yourself, or being deluded by yourself. I think that you pick up pretty quickly. It's nice to have an individual that is in it. Saul is working the same levels. He's working the same technique, price action. So when you ask him a question about a trade, an area, a stop placement, an entry point, an exit strategy, how the trade worked out, how the trade didn't work out, he's going to give you an answer, not only the technical answer, but the emotional response answer. How the market was behaving at the time, what happened when he was looking at that trade, because he's looking at the same areas, whether it was something that you can adjust and tweak for the next time, or it could have been just what happens. And the fact that you have your stop placement in there is a good thing. Not every trade's a winner. We call this working the market to be able to come out the other side, or wrestling the market and come out the end of the morning session with a profit in your pocket. Well, during that opportunity, you're going to get out of trades early before you get stopped out. You're going to let trades go because you're going to be good enough at some point here to have multiple contracts. And you're going to be able to come out with the money that you're looking for. But if you add up, let's just take a step back and think about this for a second. If you made $50 today, it's not a bad day. If you make $100 today, or let's say tomorrow, if you make $50 tomorrow, that's not a bad day. Make $100 tomorrow after your expenses, it's a pretty darn good day. You start rolling it up into $250, $300 a day, you really don't have to hit home runs. It's really just chipping away based on scalping the market that can put on some money for yourself and just push yourself away from your computer and be happy. As you start out Let's say you set up your account, you fund it yourself with your risk capital only, money that you can afford to lose, that's invested in you, in your business. You watch your account grow and you can add contract size. But the concept of being disciplined, the concept of, having a trading technique, working that trading technique. I always say in simulation first, manage your technique, add in Saul's levels, pay attention to what happens at those levels, listen to his commentary, ask questions, listen to how he's describing what's going on, pay attention to the hours when the economic numbers are coming out, make sure you're flat, interact based on this coaching session, based on what you need and what you're looking for, whether new or experienced. The opportunity to have Saul take you around your shoulder and teach you, work with you, help develop you to become the best trader you can be. That's the one-on-one coaching. Group coaching session is great when it comes to starting out as a new trader, an experienced trader that is looking to get better at their trades. Often we talk to individual traders that are experienced traders. Often those individual traders are very close to making money. In other words, they have done the work. They have experienced or have experience in order entry. They have experience in trading losses. They can almost taste and smell their success, but they've been doing it a long time and have not quite gotten there yet. I always talk to them about the concept of being adjusted and tweaked based on where they are. Have them do a one-on-one coaching session or a consultation with Saul, describe where they're at, describe what they're doing, and then have Saul adjust and tweak them so that they can bridge the gap between where they are, which is on the cusp, to where they'd like to be based on becoming a profitable, consistent profitable trader based on those adjustments and tweaks. Sometimes I'm really surprised because there are individuals out there that would or have been working for a very long time trying to bridge that gap and are so stubborn that they don't ask for help, or they've asked for help from somebody. Saul's been doing this for 25 years. Saul is actively scalping. Saul has adapted and tweaked himself based on price action trading. There's a lot of people that can talk a good trading game, but they really can't help anybody because they're probably not trading themselves, but they're talking a pretty good game. So my point is that individuals will come in here into the service, they'll kick the tires, they'll get to know Saul, and then they start to realize this guy is pretty good at what he does. When it comes to trading, he's the real deal. But you get to witness that yourself. The other side of that is, let's say you came in and you got Saul's levels and you started to see that his levels were terrible and the market doesn't do anything in around his levels. And the fact that he is predicting the future is not working out. And you're witnessing it. What we expect to happen is that you get Saul's levels pretty close to the cash open. You write them down your trading pad. You load them into your software so you can pay attention to what's happening in around those levels. And you start to pick up that Saul's levels, his commentary, the action of price looks pretty good. And those levels become a help to identifying areas where you can step into trades. And you can start to pick up the difference between what's happening based on the action of price vis-a-vis his levels. And you can start to determine areas that are good to get into trades, areas where the levels have become invalid based on the action of price. And that is a significant leg up for you in a trading arena. That takes the cash open, I don't know what to do, I'm seeing so much coming into my screens that I'm being distracted and I'm losing. You know, we get a lot of feedback, and part of the feedback is that Sol's charts are very basically represented. And the reason that is because they're really just placeholders for his levels. The levels become the areas of interest. And if those areas of interest turn out to be actionable areas, well, then you've solved your problem with overdeveloped, too busy, too confusing charts, time frames, crosses, lines, moving averages, all the stuff that is presented on a trading platform. We get a lot of traders out there that are experienced traders that know a lot about trading, know a lot about making charts, know a lot about the opportunities and indicators that are part of a charting platform, but really have no winning trades or track record because they're so confused by the lagging information that's coming in, you know, the after market movement information that comes into a trading platform, that you're constantly chasing the market or getting stopped out. In this case, what's the vive la différence is that Sol has stripped out, and I should really say this, that Sol never really threw a lot of stuff into his charts. He's been around the market where he doesn't need to do that. It's not helpful in his trading and his belief. So his charts are represented as they are, and individuals that come into our service may make the decision to simplify their lives down to charts that look like Sol's. Don't sweat what is generally adopted by traders, which is trading platforms with all the bells and whistles, where individuals think the more bells and whistles they have, they believe they have an advantage over other traders. In this case, the converse is true based on this methodology, price action, is that Sol's charts are simply represented. His levels are simply represented. The action of price, the interaction in and around those levels is where the beef is when it comes to the trade. And then it's a matter of setting yourself up as such, and then practicing, asking questions, you know, plotting the levels, paying attention to what happens in and around those levels, and then look to capitalize on that movement based on fade trades or momentum trades, looking to pick up 2 points plus on each trade, defending at 2 points generally, but that changes based on the action of price. Sol adapts and tweaks based on the current market action. You can learn to adapt and tweak based on the current market action. And then you start to narrow it down picking up a few winning trades during the morning session between 9 a.m. and 11 and being done for the day. And if it's a losing day based on stop placement, your action of your entries, exits, and stops have minimized the concept of large losses or letting things run and hoping by doubling up, tripling up, that the market will come back in your favor. So we do everything in Zoom. ZoomTradeAlong.com is the URL to come in. ZoomTradeAlong.com is the URL to come in. Pop in, it's free access. You're on a free pass, a guest pass. We ask you to quickly shift over into a paying subscriber. Our subscriptions are all done through PayPal so that you have control. You can come in, you can come out of your subscription. Right now we're running a special. If you get the special price, it stays. In other words, let's say you have it for a month, rolls over. It roll over at the discounted price, so it doesn't reset to the full price. Keep it as long as you like, or you could cancel. You're in control because you can log into your own PayPal account. You don't have to ask us to cancel you. I think individuals really do like that. We don't take any information from anybody when it comes to your private data. It's all done through PayPal, which we also like. So we don't have to hold anybody's credit cards or that type of thing. It's nominally priced. It's interesting to me that individuals have come in. They know what they're doing. They have a trading technique, and they add in Sol's coaching levels to their technique. They're very appreciative of that, and they continue to pay. The concept of having a group trade along has been a hit when it comes to a concept called trade along group price action trading, trade along, educational format only. And then the concept of how do I start out as a new trader, or I've been trading for a while and I just don't get it, and I need somebody to help me bridge the gap from where I am to where I'd like to be. That's part of it here. We can take an experienced trader and tweak them up. We can take a new trader and tweak them up to help them become an experienced trader. You can get set up with through one of our affiliates to get set up for a trading platform. If you're interested in earning the right to trade somebody else's money, we have that opportunity through an affiliate. We are the individuals that can help coach you up to help you survive, excel based on your own abilities to become an independent, active scalper / day trader, intraday market trader. And we do it every day. The Zoom room opens up at 9 a.m. Eastern time. We have a opportunity for new traders to come in, experienced traders to get set up. At about 9:25, your trade along coach comes in, swaps out charts, gives out the morning's coaching levels, the day's coaching levels. It's a pivot and other levels on top and bottom of that pivot. For a reference today, we had the pivot at 53.03, 53.03. We had resistance at 10, 20, 31, 40, and 50. Below we have 94, 85, 75, 67, and 58. So those were the levels that were given out this morning for this morning's trade. Trade action coaching in the S&P 500 E-mini. Those are the coaching levels for the morning session. We call them, and they are levels and zones for the morning session. Individual traders come in, they take those levels, they write them on the trading pad, they load them into their software, they load them into their order entry. Now, if you don't know how to do that, that is what is available for you to learn from your trade along coach. And then the action of putting trades on and taking them off in and around those levels as appropriate based on the action of price. Entries, exits, and stops are taught here, and the whys. Why do you enter a trade? What level? Where do you exit that trade? What's your pickup of points? What are you looking for? What can you expect? What's your defensive position on that trade? Well, there's your stop, and then there's also your exit strategy. And that can be before your stop, before you get stopped out. How to set up your charts, how to set up your order entry, what to do, what not to do, how to set up yourself in simulation mode only. What kind of data do you need? Who's got a decent platform for you to trade off of? Maybe you want to switch out from your current platform. You know, there's a lot of platforms out there. Some are good, some are bad. Some give you the ability to get out of a trade by picking up the telephone if you get into a pickle. You know, there's a lot of pros and cons based on commission structure. You know, becoming a successful trader, you know, starting your own trading business, becoming a successful trader for your trading business. You know, there's a lot of experience in that arena that comes before you and is available to you. And what's nice, I think, about, you know, what Sol has to offer and this service has to offer is that you have the ability to learn from people that have been doing it for a long time, have made a bunch of mistakes, may continue to make a bunch of mistakes, but you have the advantage of learning from their mistakes or our mistakes so that you can have a leg up in this arena, and you have a leg up in this arena from individuals that are actually trading and giving you the opportunity to, in this environment, right? It's called a trade along, a trade action trade along in an instrument. You know, index trading, you know, the S&P 500 E-mini is a value price basket of 500 stocks boiled down to a price that can go up and down during the trading day. You can make money on the upside. You can make money on the short side where you're selling and buying it back. On the upside, you're buying it and selling it off higher. And there are techniques. In this case, price action. Is the opportunity. Hey, Carlos, you're back. Let me know in chat. Pat G, let me know if you're back. Yazoo, I reached out to you this morning. You haven't responded all day. You're being identified as a bot. If that's the case, then we'll just exit you. If that's not the case, let us know by giving us a quick hi sign. You know, this is a dialogue. If we don't have a dialogue, what's the point? I think that's the other thing is that, individual come in for our levels. As long as they're paying for them, we don't care. But we get individuals that come in as guests, and won't make the transition over to paid, guest to subscriber, which is nominal. The feedback is pretty clear that if there's an opportunity to make money in and around those levels, people come back and they come back. But if they're non-responsive, we're not sure sometimes whether they're in front of their screens or not. We don't have a window into, where they are, whether they're a bot or not. But we can sort of quickly pick up and exit them from our service. If you get exited, we have to authorize you to come back in. Sometimes we do, sometimes we don't. Generally, we let them come back in a couple times, and then we exit them forever. We don't want to start doing that unless we have to. So we have links for individuals that are looking to set themselves up for trading. We've got nice affiliate links for you. We also have an affiliate link for those that are looking to trade somebody else's capital. In other words, set up with a trading platform that you practice on through them, based on their opportunity and how they're set up. So when you pop into our Zoom room, ask, and we'll send you out the links. If you pop in and you are interested in having a one-on-one consultation about what this service is and what the opportunity for you is as an individual looking to set up your trading business, or you are trading and just not making it, and you wanted to have that kind of conversation, pop in to our Zoom trade along, and we'll set a conversation up with you. I think it's important to know on an individual basis what you as an individual are trying to accomplish. The idea of setting up a trading business, being the talent in your trading business, is certainly a goal. How you get there, consistent profitability, is an opportunity that is presented here based on this group coaching session. and the opportunity to join us on a daily basis. And then as an individual, you have your own way of learning. You're treated as an individual. The one-on-one coaching sessions are great for that. But I always encourage individuals like yourselves to come in to the Zoom room, sign up as a guest. We ask you to switch into paid, guest to subscriber. It's a lot that goes on here. And then we look to help you when it comes to what you're looking for, help you develop the opportunity when it comes to following along, practice trading, and then ultimately helping you develop what we call consistent profitability. And then it's really up to you to decide how you're doing, how this is working out for you, whether the concept of intraday trading is something that meets or fits your personality. And I think that's really important on an individual sport basis, individual contributor basis, to be able to practice trade based on a discipline, a roadmap, a trading technique. And price action trading, I believe, gives a real shot here for individuals, particularly if you load in Sol's scalping levels and you pay attention to the action of price, pay attention to your trade along coach during the morning session. And it's my belief that the more you do that, the more time you spend practice trading in and around Sol's levels, picking up how the levels are working, when they become, or when they stay valid or they become invalidated, paying particular attention and concentrating based on the action of price vis-a-vis his levels, you start to really get into a groove and a flow. And the idea is that trading is an art form, and you start to pick up on the nuances of the art form, and you start to get into that groove, and you start to anticipate the action of price vis-a-vis these levels, and be able to get into a trade, your entry price, get out of a trade, your exit price, as almost a second nature opportunity when it comes to the trade. Too often individuals will set up a charting platform, a trading platform, and they won't let, it's all about the making money part versus the letting themselves go in the simulation practice trading part. I always suggest that individuals set themselves up, and let's say you're looking at Sol's charts. Very easy to, recreate those charts. Very easy to learn how to plot the levels. Then trade like a crazy person. Don't pay attention to anything except for just trading around them. Do one contract in and out, short, long. Don't care about your P&L. Just work on the concept of order entry and what's happening based on market flow in price action trading with no risk. The only risk you have, well, when you set up you're an entrepreneur and you set up a business, there are expenses, right? You have your seat time you're spending. You have your platform expenses, your data expenses. When you start to real-time trade, you have your commission expenses. You have your internet expenses. You have your computer expenses. Those are all expenses of your business. You are the talent, developing talent in your business. A lot of times I find that people are not serious about their business, not serious about their money. And I ask them the question on whether they would fire themselves from their business, or would you hire yourself? Have you spent the time to become good enough to let yourself handle your business's money? That's double tap when it comes to, if you're setting yourself up as a trader in somebody else's business, are you disciplined and good enough for them to allow you to trade their own capital? More often than not, individuals aren't disciplined enough, talented enough, experienced enough, because they haven't taken the time to do it. That's what we supply. We help you bridge the gap, help you develop that kind of discipline, help you develop a trading strategy. In this case, it's price action. Help you develop the art of plotting the levels and then trading around those levels. And in one-on-one coaching sessions, you can ask to be taught how to set the levels so that you can do it on your own. Not only the idea of being a trader, right? But the idea of exercising your craft, learning from your trade along coach in a one-on-one session, and then being critiqued and adjusted based on your practice. And then when you go off into real-time trading and you're risking your own capital, then you would work with your trade along coach in that endeavor. And if you're doing well, great. If you're not, you go back to practice trading, working on those pieces that you had trouble with real-time trading. There was a time when trading accounts, trading platforms didn't have robust practice trading facilities. Now they do. It's not perfect. What's perfect? But it certainly will give you the ability to exercise your trading muscle and start to develop your trading technique and be able to critique your technique against your P&L. There is an opportunity, seeing money go up and down in your account can be frustrating for individuals. Converting that, and you can do that, is you convert it into points where you're looking to pick up a number of points. So if you're making money, you're picking up your points. If you're losing money, you're down points. And that concept of points can relieve some of the pressure when it comes to the concept of watching yourself up $100 or down $100 or down $200. You start to watch your price change, and it can be disconcerting. And individuals have taken steps to only watch the points so that calculation of points in your head, you can figure that out pretty quickly. But the idea is that you don't want to be watching the money, because sometimes money can be problematic when it comes to, a psychological the psychological concept of making and losing money, and witnessing that in your P&L. You're, whether you have a platform or not, real time P&L monitoring can be a frustration when it comes to dollars, but the concept of real time point assessment can help alleviate some of those issues. Hey, Peter C., welcome aboard. Hey, Peter, I'm going to send out our introductory message to you. Just give me a sound check in Zoom. Let me know that you hear my voice. See our charts. We have a pretty nice welcome message. It gives a description of what these services are, the timing. The various pieces of our puzzle here for you as a newer experienced trader. So let us know back in chat if you're new or experienced, that you received this and read it. What's nice about it is it gives you, the 9 a.m. to 11 a.m. time frame Eastern time. Watch, listen, learn to trade better, key trade action levels and zones, entry, exit, and stop techniques, trade setups and scalping, trading account capital available, through one of our affiliates, trading platforms available through one of our affiliates. Our mission is trade action coaching sessions daily between 9 a.m. and 11 a.m. on a daily basis, focused on scalping the S&P 500 E-mini. S&P 500 E-mini being a index future. So right now it's 12 noon Eastern time. We're going to wind this down for the day and come back again tomorrow at 9 a.m. Eastern time. Look for those that have registered for Zoom, look for the Zoom link in your email. If you register by mistake with a fake email, there's a lot of people, I don't know why they do that, but they do. Re-register at the same link with your right information. If you like what we're doing here, tell your friends. We have a number of URLs that drop you right in. One is zoomtradealong.com. The other one is emini-tradealong.com. And again, this is for individuals that are looking to set up their own trading business, whether it's trading somebody else's capital or your own capital. We can help you get set up with a trading platform so that you can start. Practice trade against real-time data vis-a-vis your trading platform. Work the market based on a price action trading methodology. Receive our scalping levels in the morning session, work those levels. Work with your trade along coach in the group coaching session, and we go from there. So emini-tradealong.com, emini-tradealong.com. And again, if you like what we're doing here, tell your friends through social media. And appreciate you joining us. emini-tradealong.com.